तो गाइस आज डिस्कस करने वाला हूँ जो मैंने 3 तारीख को ट्रेड लिया था। मैं ऑन कर देता हूँ कैमरा। अच्छा, ಓಯ್ ಇದೇ ಪ್ರಸನ್ನ ಲೈವ್ ಇದ್ದೇವ್ ನೀ ಎಲ್ಲ ಕಾಣ್ಸಾಮತ್ತಿ ನೋಡ ಯೂಟ್ಯೂಬ್ದಾಗ ಬರ್ತತ್ ನೋಡ ಆಮೇಲೆ। हाँ, तो ठीक है। तो आज हम डिस्कस करने वाले हैं जो मैंने ट्रेड लिया था 3 अगस्त 2026 को। यहाँ पे देख सकते होंगे मैंने पुट जो है खरीदा हुआ था 12.70 पे और उसको बेच दिया 15.30 पे। जैसे कि आप देख पा रहे होंगे यहाँ पे 4 अगस्त का मैंने एक्सपायरी डेट लिखा है, तो देखा भाई यहाँ पर देख लो। 3 अगस्त 1350 को मैंने ट्रेड लिया था। आपको दिखाता हूँ 1350 यानी एक 150 का लिया था ट्रेड। और मैंने जैसे कि कहा था 3 अगस्त को ये पकड़ लेते हैं। कि भाई आखिरी मिनट में जब से टाइम बढ़ाया हुआ है सेबी ने, तब से आखिरी मिनट पे ये एकदम ऊपर चला जाता है। ये तो तेजी से जहर ऊपर है। ठीक है, मैंने ट्रेड उठाया था लगभग देख पा रहे होंगे। हो गया भाई। चल आजा 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 मम्मी। ओके, यहाँ पे थ्री थ्री को 3 तारीख को मैंने ट्रेड लिया था और इसका टाइमिंग जो है वो 150 को लगभग लिया था। यहाँ पे 3 तारीख 150 मतलब यहाँ पे लिया था भाई। यहाँ पे मैंने पुट पोजीशन लिया हुआ था। दिखा रहे होंगे भाई, यहाँ पे यहाँ पे पुट लगा देता हूँ शॉर्ट। यहाँ पे मैंने ट्रेड लिया था, मेरा टारगेट था कुछ 20% का टारगेट था। तो इतना चला गया था सो साथ मेरा टारगेट 50 कुछ इस तरह से था। वैसे मैं नहीं देखता कि में बहुत टाइम मिल जाता है। एक तारीख को ये रहा बाईस, ये रहा 150 को। तो ये रहा गाइस कुछ ये रहा गाइस। तो यहाँ पे ट्रेड ले आया था। वो यहाँ पर ट्रेड पे जो है मुझे लॉस हो गया था इस कुछ ज़्यादा ही। यहाँ पे मैंने ट्रेड लिया था गाइस, तो यहाँ पे देख पा रहे होंगे, यहाँ पे 150 का ट्रेड लिया था और यहाँ पर क्रैश हो गया। तो यहाँ पे इतना तो मैं टारगेट और ये है मेरा स्टॉप लॉस। और जैसे कि आप देख पा रहे होंगे, यहाँ पर ब्रोकेज जो है बहुत लग चुका है। ब्रोकेज 280 का ब्रोकेज लगा है। जितना मैंने कमाया था उससे तो भाई ब्रोकेज ही दे दिया है। वैसे देखोगे guys, तो ये थोड़ा 3.1 से जो यहाँ पर रिजेक्शन लेके फिर से यहाँ पे क्रैश हुआ है। तो देख सकते होंगे, यहाँ पे और दूसरा ट्रेड लिया हूँ 7 अगस्त को। यहाँ पर ट्रेड लिया हूँ तो यहाँ पे बाई किया है 56 को और सेल किया है 58,000 को।
projects under government schemes for the government of India. We are led by Mr. Sanjay Tyagi, who is the managing director of a company and a civil engineer by qualification. He has more than 35 years in the field of infrastructure development experience. Over time, we have executed projects across verticals and segments of roads, highways, power transmission, water and wastewater management. We keep evolving with the visions and missions of the government. Currently, we are focusing on executing wastewater management in urban cities because, see, water is a scarce resource and very limited, with no generation possible. Our rivers are being polluted day by day, and the ground levels are reaching new lows day by day. Mm. We've all heard the motto, save water, but we can only go so far with that. Eventually, we cannot reduce the water consumption required for drinking, industries, building construction activities, gardening, irrigation, and water required for farming. Right. So, in order to ensure the preservation of freshwater resources, the Government of India is pushing towards schemes that ensure that urban wastewater is made fresh for reuse once again. Karthikeya, I wanted to understand about your current order book, and also if you could give us an understanding of what are you going to be using the funds that you're raising from the IPO for? So, ma'am, our current order book stands around 1,500 crores, and 98% of that is under wastewater treatment. And so the fresh issue, the working capital we are raising, it's mainly for the execution of these projects and for bidding for further prospects under these schemes of central government. Okay, Pawan also has a question for you. Pawan, go ahead.
So Karthikeya, I have seen that the entire of your order book is dependent on the government orders, and
Yeah.
does it hamper your business performance? Also, can you please tell me, throw some light on the cash flow management of your company, because the operating cash flow is very much dependent on from the receivables from the government. That increases your dependence on the working capital as well.
Yes, sir. So, as you said, we are a completely B2G company. The entire order book is from the Government of India. We feel pretty secure in that because there's a lot of opportunities in this segment under the schemes of Amrut 2.0, Namami Gange, and Swachh Bharat Mission. And there are multiple projects in the pipeline as well that we are bidding for and that are being launched by the government. As you talked about the receivables and debtors, so as you can see, our debtor day cycle is around 90 to 120 days. And the aging of those debtors, over 6 months, you will only see an amount of, let's say, 2 crore or something like that. So the payments are pretty secure as they're from the government, and the central government is continuously monitoring the discharge of these funds to the projects. So we feel pretty secure with that.
Okay. I also wanted to ask you, Karthikeya, if you could break down your revenue mix between EPC construction and operations and maintenance, that's O&M business, and how do you see this mix evolving over the next few years? Because there's an understanding that O&M contracts typically provide more stable and recurring cash flows than EPC projects. So what's your focus going to be?
So, ma'am, all of these contracts that we have in hand, the 1,500 order book that I talked about, they're all EPC contracts, but O&M component is also involved in them, from ranging from 5 to 15 years. So the current order book, I think it stands around, one second. So O&M would be around 120 crores out of that order book, and the rest would be EPC, which would be the construction portion of it. So that would provide us revenue visibility for the future over the next 5 to 15 years.
Pawan, go ahead.
Karthikeya, I also want to know something around that. Majority of your work is coming from the BJP ruled states. So, if there is any change in the government, will it hamper your business or will it impact your order book potential in the coming years?
See, so that's a very common question that we get. We go into states where there's like political stability generally, so double engine ki sarkar and everything. So, but see, these are central government schemes, so it won't matter if the state government changes. We've had that happen to us in Rajasthan when we procured the projects that we have. The government was Congress, but then later on in December, the elections were there and BJP came into power. So the projects were not really hampered. So these are central government schemes. That's what matters. And I don't think we would see any problem due to that.
Right. Karthikeya, I think this water and wastewater treatment space is also becoming increasingly competitive. What will differentiate Technocraft Ventures in this space? Where do you see your competitive advantage?
You're right, ma'am. It is definitely a field that a lot of companies are looking to move into. But over the last 10 years, we have pivoted and focused towards wastewater treatment completely. So we kind of have an expertise in executing composite projects, which provide like end-to-end solution from the household, laying the pipelines across the city, Over the last 10 years, we have laid more than 1,200 kilometers of pipeline and commissioned more than 750 kilometers of that. So we provide end-to-end solution. We lay the pipelines from the household across the cities, build the treatment plants that treat the water as per the guidelines of the National Green Tribunal, and then the water is made deemed fit for reuse. And we have constructed sewage treatment plants of capacities more than 40 million liters per day and 56 million liters per day. So as our qualifications in this field are growing, we are able to qualify for higher ticket size contracts. And the largest ticket size contracts that you would see in the segment of wastewater treatment would be in the range of 400, 500 crores. And we qualify those contracts. So we have been moving and progressing as our qualifications. And as you know, for bidding for a contract for the government, you need pre-qualification criteria. So they assess the technical eligibility of the bidder first. See how much, if you want to execute a work of 100-kilometer pipeline, they want you to have already executed 80 kilometers in a single project. If they want you to build a 60 million liters per day plant, then you already need to have experience of building a 50 million liter plant. And a lot of these schemes that are coming forward, they're all composite schemes providing end-to-end solutions. Because just building a plant or just laying the pipeline is not enough if they're not like combined. Because you build a plant and the pipeline is not laid, the plant is useless. If you lay the pipeline and the plant, if you lay the pipeline and the plant is not built, the pipeline that you've laid across the entire city is useless. The end user is not getting any benefit. So we expertise in this end-to-end composite solutions from the household to the treatment plant.
Sure. Pavan.
So, Mr.
Karthikeya.
Karthikeya, so if there is any slowdown in the project awards, will it impact your business? Or, considering your current order book, it's not very big in terms of the, compared to your peers. So will it, if there is any delay or slowdown in the allotment of projects, will it impact your business?
Sir, first, I would like to point out that the current order book already provides a 3.85x visibility of revenue. And in the future, we're also bidding for many other projects. 750 crores projects we have already bid as on today that have been submitted after the RHP was published. And so there's a lot of opportunities in these projects. Currently, we're only operating in 6 states, which is Uttar Pradesh, Rajasthan, Madhya Pradesh, Delhi, Odisha, and Bihar. Though there are multiple opportunities in other states as well, so we keep exploring on day-to-day basis where we can keep our margins and selectively bid for projects that are similar to the scope of work that we expertise in. I think we're pretty confident of bagging more orders and increasing our order book day by day.
Okay, Karthikeya, what about your margins? What are the sustainable margins that you're looking at over the next couple of years that investors should look at? What kind of levers do you have to further your margin improvement from here?
Yeah. So, ma'am, as you have seen over the years, our margins have grown. And that trend is because we are focusing on wastewater and this segment particularly and moving out of the other segments that we were earlier involved in. Okay. And also the contract value, the ticket size, as I earlier mentioned, has been increasing. So the competition in those bids is less and everyone bids with their own margins in place. So that's why our margins improving. I would say it would stay around what we are at right now, which is 20%, 21% EBITDA. And the profit after tax would be in the range of 12 to 13. 1-2% up down, I can't say, but I think this is what we would be looking at to keep it sustainable.
All right. Thanks a lot, Karthikeya, for getting us all of those insights about the IPO. I wish you all the best for this journey. And we will, of course, touch base again when the stock gets listed as well. Thank you so much for your time.
Thank you so much, ma'am. Good morning.
All right. Pavan, what about the top brokerage houses? What are they saying about this IPO?
So, Sakshi, majority of the brokerage firms have suggested to subscribe to this issue, but only one brokerage has given it an avoid rating, that is Marwadi Financial Services. Okay. However, it has gathered positive ratings from Anand Rathi, Swastika, Sushil Finance, Ventura, BP Equities. They have all suggested to subscribe this IPO. But investors need to understand that water waste management is a long-term process because the project is executed in a long time frame, and maintenance and operations that the companies that are awarded the projects, the cash flow is a bit delayed. So the long-term execution is the major, the key that investors should understand. Otherwise, the company is good. They have a decent order book and a position from the government, because water waste management is awarded by the government only, and they have not been with any private players so far. and the company management, they have an experience of more than 3 decades. The founder, he is also a civil engineer. He was with Ghaziabad Authority. So these are the key positives
Sure.
that one should understand.
Thanks a lot, Pavan, for getting us those details. So that was Technocraft Ventures. Viewers, I hope you understood a lot that has been going on as far as the management vision for the company is concerned and what a top brokerage is also saying. We'll take a break right here, but when we return, we're going to be discussing all about the markets and where to look for opportunities.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. In this earnings special, we turn our focus to Lupin. The company reported a 33.3% year-on-year increase in revenue to 8,217 crore rupees in the June quarter. EBITDA rose 42.8% to 2,580 odd crore rupees, while EBITDA margin stood at 31.4%. The company also continued its investments in research and development during the quarter. As the global pharmaceutical industry navigates evolving U.S. trade policies, tariff discussions, and pricing dynamics, what does the road ahead look like for Lupin? To discuss all of that, I'm joined by Ramesh Swaminathan, Executive Director and Global Chief Financial Officer at Lupin. Ramesh, very warm welcome. It's a pleasure to have you on the show. So since we last spoke, Lupin has been on a profitability journey over the last few years. So tell us more about the drivers of this performance in this quarter, and have you now reached a new normal on margins, or there is still a room for improvement?
Well, in the first instance, thank you for having us on. We're really very happy with our overall performance, and clearly because of the fact that this has been secular growth across geographies. There has been, of course, good performance in America, an exceptional performance in India, and of course, good performance across all other geographies as well. So clearly, we are pretty happy, and more importantly, it's the profitability. There's, of course, the top line buoyancy that contributed heavily to the overall profits, but there has also been tremendous focus on cost, as could be evident from the various lines of the PNL. So clearly, it's been good performance across, and we are pretty happy about it.
All right, so let's talk about the U.S. business that continues to be the central point for your company's growth. So
the alignment with respiratory products has paid off because they are also pretty sticky in a general sense. And that's one reason why we continue to do well.
in the U.S. market, you are aware of all the geopolitical situation that's happening. The U.S. has also indicated the pharmaceutical imports that it could face tariffs. So how is Lupin preparing for that possibility, and what could be the business going forward?
There are several moving parts. Commenting on this, we'll cross the bridge when you actually come to that. But that said, we also are investing in America. We're looking at manufacturing facilities being expanded both in Somerset as well as in Florida factory. So clearly, we are looking at investments out there as well. We already have, in fact, a research center also. So the investments in America are on, and with the fact that if in the event that there is going to be generics, tariff on generics, it is certainly going to impact the U.S. population also. The cost of production, from their perspective, the cost of buying goods would certainly increase. And that would, in some ways, be not a good thing for them also.
So let's talk about other geographies. Your company has built a diversified business across geographies and therapies, to say so. So, which parts of the portfolio do you believe will shape the company's next phase of growth, and why do you think so?
So it is obviously, as I said, secular growth. But let me talk about India. India has been quite an outperformer. We've always said that we would like to look at growth above the market by at least 25 to 30%, and that has indeed been the case this quarter. Our three major areas, which is essentially cardiovascular, diabetes, respiratory, they've all done very well. They're coming up very well in the case of GI as well. Our injectables business has done extremely well. So all of these have certainly contributed. But equally, we also had the addition of Visupharma in Europe. So that is something that we had acquired on the 1st of April. So that has done very well. Clearly, our forays into specialty, in that sense, is certainly paying off. Brazil continues to do well on the back of dapagliflozin. The API business has picked up thanks to, in fact, the price decline in PNG. So there has been, all-round performance, I would say.
And you've also continued your investment in the research and development. Help us understand how do you decide where to invest, and what should investors actually expect from the pipeline over the next few years? And where is the investment going on in R&D basically?
So we already realigned our entire focus onto more complex products. So respiratory clearly is very important to us. We really work on nearly every product when it comes to respiratory. A lot of complex injectables. We're focusing a lot on 505(b)(2)s and the like, and clearly on biosimilars also. The recent relaxation of the regulatory pathway when it comes to, in fact, biosimilars is certainly going to help us. They're looking at, in fact, biomarkers instead of PD clinical trials and the like. So from that perspective, the cost of entry is going to be much lower. There would, of course, be competition, but having said that, there are not too many players when it comes to biosimilars. You have a lot of players when it comes to, in fact, the small molecules, but not so much when it comes to biosimilars. And very early entrance into this. So a lot of things going for us.
Okay, let us also talk about the industry moving towards complex products. So the industry is basically shifting from generics to complex products and specialty medicines. So how do you see Lupin's business mix evolving over the next 5 years, or maybe what are the plans going forward?
Clearly, the dominant share would certainly be with generics. Essentially, more of the complex stuff, as it already kind of aligned to that, pivoted to that. But going forward, of course, a lot of investments will go into specialty. We already have forayed into Optal and with Visupharma. We would be certainly looking at adding on to that portfolio with acquisitions in various parts. So clearly, that is going to be the focus area. We've always claimed, the fact that there has been a lot of expertise when it comes to the respiratory products as well. With, in fact, green propellant technologies and the like, so there is more to do out there as well. So, whilst we focus on Optal, we would also be looking at assets when it comes to the respiratory portfolio.
Okay, anything in the pipeline that you would want to share with our viewers? And what kind of assets are you looking at, and in which geographies, basically, if you can share some more insight on that?
Yeah, so if you look at Europe, we also have Nemuscler, which is play on orphan diseases and the like. So clearly, assets of that kind would certainly be interesting to us. We would always add on to that portfolio as well. So it's clearly, it's a lot of interest when it comes to these areas, whilst of course focusing on doing what we do best in terms of generics as well. Focusing on cost reduction, being the last man standing when it comes to cost, looking at increasing our productivity across the sales force, the R&D, the manufacturing, reducing our footprint if necessary, dropping products if they're not contributing enough, and all of that for sure.
Will you also tell us something more about the GLP-1 space? It's a very interesting segment. Lupin is also going ahead with that. So, what are the investment plans there? Any new products in the pipeline, if you want to share with us? And also any timelines that will be very important.
Clearly, we have entered the space in India and done very well. We are number one when it comes to semaglutide in India. It's an important space. The initial reactions are that, the overall space is not, developing to be as big as we initially thought, but we do believe that it's certainly going to be a very important part. We are certainly focusing on that. We are also looking forward to, at some point of time, bring in bofenglutide, which is going to be the long-acting one, so once in a fortnight. So clearly, there are a lot of investments going into this, and clearly, it's a competitive market as well. We have also, there are several other geographies which have opened up or are opening up. You would be looking at semaglutide for South Africa, and at some point of time, Canada and Brazil and so on. So clearly, it's a big focus area for us.
How is the India market panning out for you, and what kind of investments have you made so far? And what are the plans going forward in terms of investing in the GLP-1 business? And what kind of market share are you looking at?
Clearly, from a diabetes perspective, it's extremely important, and we believe that our connect with the doctors will get us to a pretty prime spot, and that's exactly what has happened. We are number one when it comes to semaglutide in India, and as I just spoke to you, it is also looking at, in fact, a host of products following that. We've got bofenglutide. The market is fast evolving, so we're looking at, in fact, the market, as you would always know, is also shifting to GLP, GIPs and the like and so on. So there is going to be a lot of newer products in the market, and it is going to be a competitive space. We are cautiously optimistic about our prospects in this market, given the fact that the connect with, in fact, diabetes doctors is very high.
Okay, also help us understand what are your capital allocation priorities over the next few years, and what is the outlook for the company for the next quarter and the next fiscal?
Clearly, we have, we're very acquisitive as a company. We have got about 3,000 odd crores in terms of cash at this stage after paying off for Visu Pharma. We have the ability to look at leveraging the balance sheet at least to the extent of about $1.5 billion to $2 billion. So we would be looking at assets both in India and other parts. But in other parts, it would be more on specialty in the areas that I just spoke about, which is ophthalmology, perhaps respiratory products, and potentially, orphan drugs also in that order. From that perspective, clearly we have a plan drawn up. But the proposition should be compelling enough. It's not acquired at all costs. It's acquiring at a cost that is worthwhile for us.
Okay, so given the geopolitical environment that we just discussed, what kind of execution challenges are you looking at over the next 12 to 18 months, given the circumstances that we have just discussed? What are your plans to navigate that environment and any risks that you are anticipating?
Clearly, there are dark clouds on the horizon. Clearly, competition for mirabegron is what it's already evident. Tolvaptan at some point of time lose exclusivity status. So, whilst things are going very good for us, we're also conscious of the fact that there could be a decline in these products, which would bring down the overall buoyancy on the top line, and of course the profitability itself. And of course, the other area for concern is essentially the geopolitical tensions and the cost rise associated with that. If you look at oil, it's quoting at $86 to a barrel. The cost of logistics, which is essentially air freighting or for that matter ocean freighting, has gone up since the war began. There has been input cost increases. It cost us about $1.5 million, $2 million, at least this quarter, and going forward also it could be pretty, it could be a little more than that actually. So clearly we are concerned about the cost increases. Whilst there are a lot of things to look forward to, and a pipeline for the long term is indeed pretty good, and there could be secular growth. Amongst quarters, between quarters, there could be a lot of volatility also.
All right. So before we wrap up this conversation, Ramesh, also tell us that what kind of milestones are you looking at in the FY27, And anything in the pipeline that you want to discuss?
We guided for an EBITDA margin of upward of 25, and that's what we think is going to be our core. So we are still standing by that, given the headwinds that I just spoke about. But as I said, there would be secular growth over the next several years, several quarters, whilst there might be some volatility between quarters.
All right, Ramesh, thank you so much for joining us and speaking with business today. And thanks so much for sharing your insights on Lupin's performance, strategy, and the road ahead. We appreciate your time and we look forward to speaking with you again. Thank you.
Thank you very much. And again, thank you for having us on.
Viewers, that was Ramesh Swaminathan, Global CFO Lupin, talking about company's performance, strategy, and outlook. We'll now take a short break and be back soon. Stay tuned to Business Today for more updates.
We plan to double our energy capacities in the next 7 or 8 years.
Wow.
Jobs will change. When we went from the bicycle to the motor car, jobs changed. And productivity changed. And growth rates changed. And I think put all of that together, the world is really looking at India, and I do believe India's time has come.
Hello and welcome. You're watching Money Today, our brand new personal finance show. And today, of course, we're going to be discussing mutual funds ka funda, especially equity mutual funds is something that we're going to be broadly discussing today. In case you are somebody who's just starting out on your investment journey, are not sure about how to invest and where to invest in when it comes to mutual funds, equity mutual funds particularly, then this is the show for you that will, of course, simplify a lot of those complications that you have been looking at this point in time. Let me welcome our guest on board. We have Nasir Salim, the MD of Flexi Capital, joining in on the platform. Now, Nasir, of course, we do know that equity mutual funds are now being hailed as the best way of investing and creating wealth for investors. And of course, for the last many years, they have proven to be one of the best asset classes, where investors can continue to grow their wealth as well. But for all those who are starting just now and are not sure of whether this asset class is for them or where exactly should they look at, there are so many multiple categories now that exist as far as equity mutual funds are concerned. There are so many jargons to deal with. So we are going to be trying and helping all our viewers simplify all of that in this show. So we'll start off with the very basic, simple. What are equity mutual funds and why should every investor be definitely keen on looking at it?
Good morning, Sakshi. Great to be back and with you on your show. So clearly, I think 2-3 key points there. Very interesting conversation to start with, to be honest, because as mutual funds are getting a lot of popularity. I think the essence is how exactly are mutual funds on equity and how do they work? What are they all about? I think, broadly, Sakshi, equity mutual funds are basically pooled monies, which have been pooled from many investors and invest primarily in shares of listed companies, right? I mean, that's the broad perspective that your viewers need to understand.
Yeah.
A professional fund manager is the one who selects those stocks based on the fund's, mandate, whether it's, we'll get into that, whether it's large, mid or small or any other thematic funds. And then they benefit from 3 broad categories, right? One is diversification. You have a professional guy who's managing it for you, so there's professional management. And there's obviously participation in the growth of businesses without having an individual to pick up stocks themselves. So they're dependent on a professional guy, a professional fund manager who's mandated by SEBI, and it's obviously participating in the best of businesses that the mutual fund team or the fund management team decides to pick up stocks.
Absolutely. Now, who should be looking at investing in equity mutual funds is a very important question that a lot of our viewers will want to understand for themselves. And, what is the kind of investment time horizon that they have to be prepared for before they go for equity mutual fund investments?
So historically, Sakshi, I would say this, when you said who and why, and we'll cover both these points together. Number one is equity as an asset class historically has been helping investors participate in economic and corporate growth over long periods of time. Markets, of course, have been very volatile in the short term, as we've been witnessing over the last few quarters. But the disciplined approach in investing in longer horizons, which has the potential to create wealth through compounding. The word is compounding, as actually. And therefore, any investor who ideally has a time horizon of 5 years and beyond or more becomes the longer holding periods, which obviously smoothens out any short-term market fluctuations. So clearly, equity mutual funds need a horizon of at least 5 years and plus to make some great returns, which helps from the fact of compounding. We call compounding the eighth wonder of the world. This is it. So it's long-term with compounding benefits.
Long term, at least for 5 years, is something that you have to look at when you're looking at equity mutual funds. That's the bare minimum if you really want to see some kind of compounding to truly work for you in your investment portfolios. That's the minimum that you should have in your mindset. Of course, it's not like there is any lock-in. You can, of course, get out tomorrow, but this is a lock-in that you have to enforce in your own minds, that you have to stay disciplined with your investments and have a long-term horizon to truly see the magic of compounding unfold for your own portfolios when you're looking at equity mutual funds. That's something that investors must know. But now, like you also alluded to, we have to know what are these funds, where are the opportunities. So how should investors be really looking forward to? Now, there are three broad categories: large cap, mid cap, small caps, which are the basic ones that everybody looks at, but usually gets confused, and which ones offer the better opportunities, or should it be a mix of all three? What would you advise here?
So three things clearly, Sakshi. Number one, don't start your journey with just looking at funds. I think we have to take a step back and figure out 3-4 key things here. Number one, what is your risk appetite? Then number two, your time horizon, right? Number three, are you willing to accept certain short-term losses for long-term capital gains? I think these are very core, and therefore my request is you must seek a professional and an experienced person who can help you navigate through some of these choices. Then comes, the choice of fund, as you rightly said, Sakshi. So there are multiple funds today as we speak, which has been mandated by AMFI and by SEBI. In this case, there are often we hear terms like large caps, mid and small caps. I think the distinction broadly between some of these categories, between large, mid, and small, since it's we're going to be discussing it more in detail. Large caps are funds which are relatively more stable. Mid cap, on the other, and small cap funds can, for example, experience sharper ups and downs. Higher growth potential often comes with higher volatilities, actually, and therefore, so investors should choose based on their risk profile, which I mentioned to you, and investment horizon. So somebody who's looking for a linear journey, 5 years linear journey, not very high in terms of market volatility, wants to stay away from any major drawdowns, look at the large cap option. Somebody who's interested in looking at long-term growth, but with higher, returns and higher volatility, can consider mid and small. And then it's obviously a function of time and then a portfolio creation, Sakshi. So not one formula fits all, right? It's a function, it keeps changing, dynamically changing, but broadly, the broad principles are based on these that we just discussed.
Okay, but should as a beginner one only start with an index equity fund? Is that something that will probably prepare them from what is going to be happening as far as large, mid and small cap funds are concerned? Would you advise that?
As a starter, yes, that's not a bad idea at all. There are many passive funds available through index participation, as you rightly said, Sakshi. I think for most investors, because an index fund ideally will be very diversified, and then that can be a sensible approach to, because different market segments perform differently across different cycles, and therefore an index fund, yes, as a start could be it. And there also we suggest the mode, the starting also has to be through staggered in an SIP or in a drip feed method, which can be taken exposure to.
So that's a very important point that you mark out, Nasir. There is another confusion that always comes in the mind of investors, whether they should have an SIP approach or whether they should invest in lump sums whenever the market's correct, so that they are able to invest at lower prices. What do you ideally advise investors to do? when they go for such equity mutual funds, index, large, mid, small caps? Where exactly and how should the approach be?
Okay, so again, a great question. I think clearly, we would say that clearly to start with, number one, given where we are, if your goal is long term, Sakshi, you can never make money in the short term. So please align your long term goals with long term investing, right? When we commit to long term investing, the best way to do this, at least that we've witnessed over the last 22 years, is when you look at averaging out your entry points. Basically, what it means is you bought something today, buy it again next week, buy it again next month, keep buying it. As long as you're in the right category of funds, you've taken the decision of investing. It should be in a SIP format, what we call systematic investment plans, which are very, very popular, gaining a lot of popularity as far as India is concerned. We see currently the book at 25,000 crores of money that goes in every month, Sakshi. Now, this is all on account of compounding benefits, discipline. So therefore, as against lump sum. The other quick point that I would want to allude to here is rather than identifying a single, winning segments actually, or what we call popularly as FOMO, where a particular fund may have done really well in the last 3 years or 2 years, investors must they must use the diversified exposure routes, which basically means market leadership can shift over time, and diversification helps reduce that risk of relying too heavily on any one category. So large, mid, small, entry through SIP, long-term commitment, discipline, not looking at them every day, committed for the long, or compounding long-term wealth creation.
Okay. Another thing is that there are also now a very newer, mutual funds that are making their way and are being preferred by a lot of experts as well, such as hybrid mutual funds, such as multi-cap, funds as well, such as balanced advantage funds. If you could explain to our viewers what are these funds all about and why should investors also pay attention here?
Okay, again, this dates back to this entire discussion, or rather relates back to this entire discussion, Sakshi, of asset allocation, right? A lot of investors, especially, over the years who kind of managed to save a considerable chunk of money through investing, now need some asset allocation, which originally should have happened at the beginning of their investment journey. So SEBI and AMFI have, gone ahead and said that there are these category of so-called hybrid funds, like hybrid cars we have. So they're also called hybrid funds. What they do is they, mix in a bit of fixed income, which is debt in this case.
Okay.
A bit of, gold has become very popular now. Commodities, for example, gold and silver has also come in through multi-asset funds. They also come under category of hybrids. Then there is, balanced advantage funds, which are again sweetened by some equity, some fixed income, a combination of some commodities, those come in and pay. The point here to note is there are two broad kinds of hybrid funds. One, which has a bare minimum equity allocation of 65% of holdings. So say, for example, if you're putting 100 rupees at a fund level, 65 of those has to necessarily go into equity-oriented schemes, in that fund. That gets you the advantage of equity taxation, which is 12.5% long-term capital gain if you hold beyond 1 year. The other category is, where it's an open mandate. You can go as high as, 65%, as low as 35%, and that also gives you certain other taxation advantages. It's very important for you to have a discussion with your advisor, your distributor, to see which option suits you as an investor the most. The reason why they're getting popular is because, they're very well diversified, as I told you, in different asset classes. And the idea of diversification here in these particular funds actually is that if, say, for example, gold comes down, it doesn't necessarily mean that the returns that you've made on your fixed income part of the portfolio or the equity part of the portfolio gets also reduced. That holds up, and therefore it works in a negative correlation between each other. So it's a best strategy to be adopted if you want asset allocation between different exposures. The third one that you spoke about as a separate category, those are called multi-cap funds, and they come in with separate sets of rules.
And is there any clear difference between multi-cap and flexi-cap? If you could break that for our viewers as well, because a lot of confusion happens here.
Very valid point, Sakshi, and it does lead to a lot of confusion when we also interact with clients. clearly, multi-cap has a separate mandate. Flexi-cap has a separate mandate. Multi-cap, first and foremost, basically maintains allocations between large, mid, and small cap stocks essentially to a minimum of 25%, which basically means actually that in a multi-cap fund, they need to necessarily maintain 75% allocation on the overall fund, right? Because if you've got minimum 25 in large, 25 in mid, and 25 in small, so that comes in at 75, and they can't go below that. The fund manager mandate cannot go below 25% each of those categories. Flexi cap, on the other hand, gives a complete, flexible situation. They call flexi cap is because it's flexible in nature. And what it does is that gives the fund manager the flexibility to move across market segments based on the fund manager's assessment of opportunities. And has no minimum or maximum limit. However, I must tell you that it does have a 65% capital allocation to equity or equity-related instruments in order for it to qualify as a equity taxation instrument fund. So that's the key difference. 75, 25, 25, 25 in multi-cap. Here there's no minimum, but a minimum overall equity allocation of 65 in flexi-cap.
Okay, let's help all our viewers understand when they're going for equity funds, which are the categories that they must necessarily have in their portfolios. What do you advise?
Our recommendation is clearly when you're looking at equity allocations, you must have an index fund or a passive fund, as you rightly said.
Yeah.
Those are that's the starting point. Number two, bring in a bit of multi-asset hybrid funds, which has an equity taxation because it also gives you that additional kicker in terms of certain commodity plays, which is now becoming very attractive in the current cycle that we are in. Number three, please get in some good quality large and mid caps because you're potentially betting on corporate India, which is expected to do really well over the next decade and continuing to do so. And I would say for an aggressive investor, maybe a little bit of we could do some combination of the small cap, but those are again very, very highly volatile. So please do seek inputs from your advisor. But broadly, I would again start with those 4 points. Number one, index. Definitely a passive index fund, a multi-asset or a hybrid fund. Then you get into a large and a mid cap. These four are definitely core to your holdings. And then of course, if you feel getting comfortable, do spring in a bit of small cap funds. But those clearly, Sakshi, the horizon is
for
10
higher.
years.
Absolutely. So that's a very important point. Now, apart from this, I want to understand in terms of the mistakes that common people do when they look at these funds. And also, one of the common mistakes that everybody talks about is that it's now easy. There are a lot of platforms where people go, compare these funds, see their last 1 year, 3 year, 5 year returns, and basis that just select whatever they find that this has been a better performing fund, so it suits me. What do you advise investors as to how to go about selecting the funds for themselves?
So 2-3 points there, Sakshi. I think one of you rightly said, I mean, the biggest mistake is chasing recent top performers and investing without a goal. We spoke and reacting emotionally to short-term market movements and fluctuations and ignoring their own risk tolerance, right? So clearly, and you can't only go on past performance return. So I think, clearly the way to do this is, number one, you need to have certain filters in place. It's actually number one is it could be a filter just on return, which is fine, but that should have only say a 25 or a 30% weighting. The second one is fund manager. What is the name of the fund manager who you're investing with, and the fund house? So there are qualitative aspects also. So please look at his past performance, and that's all available today on all public domain information. So you look at the AMC, the asset management, the fund manager's name, how long has he been associated with that particular fund or that particular style of investing. Put another percentage there. 20% goes in there, 20% goes in returns. Then there are certain other scenarios which you consider, which is in this case in terms of just